Okay, hey everybody, how you doing? This is Lux News Network. Our next guest, he is the author of Before the Bear Strikes. He also won the World Cup Championship of Stock Trading in 2008. His name is Bryan Johnson. Hey, Bryan, how you doing today?
Good, good.
Good, 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 good. Can you tell us a few things about yourself? Where you're from, married or not married, and like what are your hobbies, things like that, what you like doing in spare time?
Well, I'm from a little town called Coriopolis near Pittsburgh, Pennsylvania. I am single and I do have a girlfriend, but I have a side interest in karaoke, which I really don't like the idea of being in front of a loudspeaker. It gets quite loud in karaoke sometimes, so I kind of object to that.
Yeah.
But yeah, yeah. I sing quite a number of songs. Have a big list of songs I sing, and if I ever want to look for a song I can sing, I have that list and I go to it. So, anyways, let's continue with the interview. Yeah, I won the World Cup Championship of stock trading in 2008, and I called the crash in September. It was a novel idea. I invented this little tool back in 2005 and made a study of it. And then in 2006, I attended a mutual fund managers meeting, and he said to the crowd, if anybody can call tops and bottoms within 6 days, he had a job for him. So I went home, revised my study, sent it in, and asked him next time if I had a job. They said no. So he missed out on an opportunity to sell in the big crash, 2008. So this study has turned into more of a project through the years. It took me 16 years to actually clean up the whole thing and make entries into my new book, the Before the Bear Strikes. And it took a while, and I was studying it every day, and eventually I came up with a solution. So it was a good effort, and I'm very happy to say that it's second edition now and a very enjoyable little book.
Good, good, good. So you're an investor, right? Do you invest in stock market, forex trade, crypto? What type of investor are you?
Yeah, I do not invest in crypto. I do not trust it. There's too
Okay.
many ifs about that. Even Bitcoin, it's an area I just would rather stay away from. I do invest in stocks. I buy the stocks. I bought for in. I have a website, and I for all the stocks that I recommend, I buy myself. And I invest in bonds too. Right now, bonds are kind of they came down quite a bit, and now the futures, I am experimenting with futures, and maybe I'll enter the World Cup Championship of futures trading. That's in the back of my mind, but not right now.
Good, very good, very good. Yeah, after FTX collapsed, I don't think a lot of people even trust crypto.
No, it's not an area you want to be in. It
Yeah,
really isn't.
yeah, yeah,
All they know is that the price was going up, so people jumped in, and it's like the same story. People don't know what it is, and they don't know why it's going up.
yeah,
So
right,
two strikes, and the
right,
third strike is everything's imploding now, and something you want to stay away from. Now it's affecting the banks.
right, right.
So,
Are you a long-term investor or a short term?
well, long term, if you trust the market and you feel that it's going to continue to go up, I am more of a intermediate term investor. My signals to buy for an extended run are quite a few months apart, and maybe a year and a half to 2 years, and then I'll sell. So that's the idea.
Good, 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 good. Yeah, because most people I know that either long term, they wait like 10, 5 years, 20 years, or they're day traders, like they buy and sell every day.
Hmm.
You know. So that's
All right.
interesting that you're intermediate. What got you into investing?
Well, I had an interest for a while. You know, when you're a kid, a week is a long time, and when you're investing, a week is a short period of time. I had a match with my dad for about a year, and I was trading stocks in and out, and he just held on to one stock, and he won. You just don't. I had the experience of playing around, but for no good reason at all. And then I gave a book report in 12th grade to my history teacher, and
Mm-hmm.
I did a book report on a charting book that my dad had, and that was that experience. But there's a quote from a famous investor called John Bogle, and he said that no one knows really anything about the stock market, so why not just buy and hold? And it's turned out that he's been right for quite a number of years. But it's been stomach churning all those years to see the market go way up and then way down, and no one knows why the market settles and goes back up again, but they do. So,
Right, right, right. That's true. I did read something like 80% of the time the market goes up. I read something like that online.
mhm.
Okay. How can one start investing, like to begin with? How can you begin investing in the stock market?
Well, if you are in a company and they have a 401k plan, then you can invest in that way. And sometimes they have matching funds, and you can put double your money into that. And also, if you're afraid of the stock market, you don't have to invest in a mutual fund or a ETF. You can just put it right into a money market fund, and you double your money. So why not? That's a good plus on investing. So that's the idea.
Okay. What
And if you
about
have, go ahead.
individual brokerage accounts?
Yeah, it's quite possible to if you have a few $1,000s, I would say maybe 5,000 if you do. So you can scatter it around, or maybe just put it into a mutual fund or that type of thing.
Right.
It's best to just start off with something called the 60/40 plan, which is based off the modern portfolio theory, which says just buy and hold a mix of bonds and stocks, and you can and or maybe some other ideas. And so it's just a matter of starting out, getting your feet wet, see it go up and down, and then becoming a little bit more accustomed to the stock market itself.
Right, right, right. Is it possible to beat the market?
Well, that's the idea behind my book, Before the Bear Strikes. It's a matter of I was able to identify what happens at market tops and market bottoms, and I said, well, let's go with it. At market tops, the stock market stalls out and the internal starts falling apart. And then there are other ideas like a buildup of number of what's called number of new lows on the stock market, a build of that. And then at market bottoms, we have a sign where the market displays some energy at the bottom coming off the lows of the market, and then there's the time to get back in. So I've been practicing this for since 2006, and it's been successful, and my track record proves it. And, it's just a matter of can you time the market? Yes, you can, but it's hard. And just watching TV and talking with your friends and looking at your brokerage account is not good enough. You need a pro. You need someone that knows how to negotiate the markets, and that's where you start. It just isn't. Timing the market is not for a simplistic approach. It really isn't.
Right, right, right. Yeah, yeah, that is true. I see a lot of people like on Wall Street, they use like quantitative theorem and they use like algorithms and a bunch of different things like that. And
Mhm.
yeah, they hire a bunch of mathematicians, things like that. Um, what caused the market to crash in 2008?
Well, it was a mix of things. The banks had gotten into real estate. Real estate was a big thing, and people thought that real estate would rise forever. But what happened is that people could not pay the added expense of the mortgage hikes that would appear. So they walked out of their homes, didn't pay, and then they found that these AAA rated um, mortgage funds were basically F. They turned out to be really bad investments, and the market crashed. And it's a matter of trying to stretch the advance of the real estate uh, to the max, and you just can't do that. The market will give you enough money on the upside, but on the downside, you just got to watch it. And it was fortunate for me to call the crash in September. It was my first experience of that type of thing, and it just worked out. So, but why did it go down? Well, just everything went kerplooey and then Lehman Brothers, the Lehman Bank failed, and Bear Stearns failed, and then they had this big bailout from the government, and then they had various different programs that went into place, and they say they got the economy going again.
Yeah, kind of like a Silicon Valley bank that crashed. The government just built them out just now.
Yeah.
Yeah.
Well, I think there's more contagion in it. You don't know how far it's going to spread, but when this kind of situation happens, uh, you just have to be defensive. A
Mhm.
lot of people say in the stock market, what stock should I buy? Instead of should I be in cash or should I be in stocks at this time? Playing defense is part of the stock market, and defense does win championships. So that's how I
Right,
feel
right,
about it.
right, right. You said investing in cash. I read something. Robert Kiyosaki, the author of Rich
I've
Dad
heard the
Poor Dad.
name. I don't know his approach, but yes.
Yeah, he's the author of Rich Dad Poor Dad. He said cash is basically worthless, and that people should invest in real estate or start a company or invest in stock or invest in gold. What do you think about that?
Well, if they're all going down, why not be in cash? I think it's proper to raise cash sometimes, but Mr. Kiyosaki is not an expert at market and timing, and the mantra of being invested all the time is probably a good one for the long term. But I just don't like the hurts coming with the bear market. I just don't. And it's a matter of avoiding those types of situations. When do you actually step out of the market and let it go down? He's just, bear market theory has not been developed to the point where I have done in the book Before the Bear Strikes. And I did call 2008, 2011, and 2018. And through I see doing this live test and being close to the market, I experienced 2020 and 2022. Now, in the 2020, there was a situation where the coronavirus hit, and well, the market was timing it. Market was timing out, topping out anyway. But it was a learning experience. I managed to rearrange my mathematical formulas, and that's what I did. And so um, I was able to experience that. But Mr. Kiyosaki, yeah, if you're a long-term investor and you don't want to be too close to the market, why not? Gold has had a nice run for quite some time, but also the stock market, and we shall see. That's the problem. We shall see coming up and what will happen.
Right, right. You mentioned bull market and bear market. What are those for people
Okay, a
who don't
bull
know?
market is when the market has advanced 20% from the bottom, and the bear market is when the market has decline 20% from the top. Uh, Catching the bottom, catching the bull market is and the bear market is my job.
Okay. Does one need a degree to start investing or no?
No, you don't. In fact, all of the courses that people take in college, or the Series 7 license to become a broker, or a CFA to show that you are an established stock market person, none of those will teach you how to invest. That's a big surprise. The people have realized that, and they say, well, why don't you go become a finance major? Well, investing is something where there are a lot of eccentrics out there. They come up with a different point of view. They get a followership, and then they sell their product. Their service. But Wall Street is a very much a follower type of business where it's a lot of pushing paper and following the company line. So new ideas are something that people need to approach on their own. But yeah, so that's my answer.
Okay. Mhm. Tell us more about your book Before the Bear Strikes.
Before the Bear Strikes is a document of my efforts and my system that I developed in order to call market tops and market bottoms. I spent 16 years developing this program, and it's not like a glitzy show me book. It's got all the math in there. You got charts, you got details, statistics, everything that goes into a program like this. And I developed it for my own use as well as for my subscribers. And I have it starts off by showing a little bit about what I experienced in the market and how I came across uh, my models that I have. It's all mathematical. Stock market is all math. It's all math, and you got to realize that not everybody has is right all the time. So you got to play defense, you got to play offense, and it's a matter of uh, documenting your results and putting it all on paper. And it's a summary that before the bear strikes is a summary of all my efforts and realizing that at market tops, the market weakens, and at market bottoms, the market starts showing strength again. So that's about it. It's about a 100-page book, and it shows a lot of detail.
Good, 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 good. Um, is it better to start investing when you're young or older?
Well, they say compounding is the eighth wonder of the world, and you start young and put in a few dollars into a savings account, and then you put it into a brokerage, maybe a mutual fund, that type of thing, and it pays to accumulate money at the start. I didn't do that. Unfortunately, I was so busy trying to figure out the market for years, I never really accumulated anything. But I got lucky with the figuring out bear markets, and then is when I started really making money because I could avoid the big crashes, which I really wanted to do. And I've heard so many horror stories about people losing lots of money in the market, not knowing how it happened, and not playing a defensive role in the market, that type of thing. But yeah, so anyways.
Yeah, you said compounding is the eighth wonder of the world. What do you mean by that?
Well, it is. If you put it into an S&P fund and the track record is about 9% a year, uh, if you add money to that and stuff like that, I know a fellow that invested at an Apple computer at the IPO. He kept on putting money in every week. Steve Jobs gets fired, Steve Jobs gets hired. That type of thing. The little merry-go-round of management, but he kept with it, and eventually it turned out big winner for him. He's a millionaire, and he said he just got lucky, but true, in the stock market there is some luck. And not all luck, but there is some luck, and he managed to capitalize on that, and he just compounded and compounded. He's just holding on to his tiny percentage of Apple stock, but he's done very well for himself.
Right, right, right. Um, does short selling happen in real life or only in the movies? Like The Big Short, things like that.
Well, I'll put it this way. This person, Michael Burry, who was famous for the hedge fund in the movie The Big Short, he went short. Yes, he made lots of money, but he started off too soon. He started off in 2005 shorting the market. And he should have waited until at least when the market is actually showing that it is actually topping out and going down. And the market still was strong in 2005 and 2006, and he just happened to catch it at the wrong time. So he lost a lot of investors, but he managed to do well anyways, and he became very famous for that. And he's the magician of stock market, bear markets, and but I am too. I have done it, and I won a world championship doing it. So but just selling short can be part of your overall design. But if you're starting out, just don't do it. Just stay in the cash. You get a heartache, the market goes up against you, and that type of thing. And it can be done, but it's the best to be left to experts. Or if you have a newsletter that you're following or something like that, you can take their advice, but see what happens.
Right. Do politicians influence the stock market?
I would say that policy is a determining factor, but not necessarily politicians.
Okay.
If the government starts funding in a certain area, you can probably bet that it's probably a good time to invest in that area. So, it is not a Democratic or Republican thing. It just isn't. It's just when the policy comes through, you can probably take an idea and start investing in that area if you're close to the government wishes.
Hmm. Okay. They say accounting is the language of business. How important is it to learn accounting while you're investing?
Well, I started out by going to user meetings, collections of people that study the stock market. Maybe there's a product that they follow, and I became very active in some of these internet stock market users. So I learned a bit about fundamentals and things like that, but fundamentals, people are getting away from strictly being fundamental type people, and more of it is catching the wave, momentum investing, and that type of thing. I have a smattering of knowledge about fundamentals, but I never took a course on that type of thing. So there are some books that say, well, my approach is to use return on equity and also gross margin, and start from there. And you can build on it. There are other things like price to sales, price to book, price to cash flow, that type of thing, price to earnings. And you can use those, and they will give you a perspective on things. Yes, it is it's good to have some knowledge of accounting, but not entirely. If accounting was if all accountants were experts in the stock market, they'd all be millionaires, but they're not. Accountants are gather data and they make a presentation, and then the finance people take it from there. So that's what they do. But as opposed to supposedly the language of the stock market, yes, and to some degree, but not the entire thing.
Okay. The reason why I say that because I watched a video Warren Buffett was saying that he said he want to get an investor and learn accounting because it is a language of business. And
Yes,
then,
he's
yeah,
right.
yeah. And then I learned that accounting is looking at money in the past, and then finance is looking at money at the future. Yeah.
Uh,
Uh,
yes, and that's true. Yes. So, and Warren Buffett, to his credit, says buy when stocks are people be greedy when others are fearful, and be fearful when others are greedy. So it kind of goes with market types and market bottoms. That and now he declares himself not a market timer and doesn't really follow that degree. But he says if he sees a bargain, that's all he needs. That he wants to buy these great stocks at a bargain price, and that's what he gets because he knows how to do it. I am not an expert on financial statements, but I wish I was, and I am making the steps to do that. But I want that to be part of my studies in the near future.
okay. Um, Tell us about the World Cup Championship of stock trading. What is it, and how did you win in 2008?
Well, here's the GIF of that. I had invested in the U.S. investing championships in 1991. I took 30th place with a 26% gain, and I beat out some brokers that I knew in California. So, but uh, I had known about the World Cup, in transit, looking at results and things like that. Here, Larry Williams in 1987 made a 10,000% gain in 1 year, and he did very well with that. He went from 10,000 to 1 million. Okay, and so he excelled. And that was a big turning point, I think, for the World Cup, and they got attracted a lot of people. And I just happened to invest in 2008 and win. And there was one other person that was in second place, and during the contest, he wasn't shown on the charts because his gain was less than a 0.5%. So he managed to get a trophy out of it, but he did not have a very spectacular result. So, but the World Cup's been around for a while, and I knew about it. I had read about it, but it just happened to be I invested at that time.
Okay. Tell us about your website, moonrunreport.com.
Yes, my website is was started in 2009. I happened to be part of uh, the group that I said I was thinking, I was saying, well, maybe I should have a website, or I don't know, that type of thing. Should I join a firm? What should I do? And the people I talked to said that market timing really isn't part of the mainstream thought in Wall Street. It really isn't. And I said, okay, well, I'll form a website. I got one person at the start, and then I started picking up more members and going out giving speeches, things like that. Moon Run Report, the website, the contents. I have 8 different portfolios, two mid cap, two minor cap, and two small cap portfolios, and then I have a long short portfolio and of ETFs, of the indexes, and then also an ETF portfolio. So it just so happens that the I over the years I have compiled some very good models, and they happen to excel. And I am also now being ranked by Hobart Financial Ratings. They are based in the Washington, D.C. area, and have I am as of the last let's see, February 28th, I was in number six place for the last 12 months, and I continue to use that service as a to see how well I've done myself. So, but the Moon Run Report is $10 a month, and it's not going to break anybody's budget, I don't think. And I continue to service the community. There's the first month is free, so you can take a look, and if you don't like it, you can exit with no payment at all. So that's what I have to offer. It's the first month is free, and it is moonrunreport.com.
Monroecode.com. Okay. Um, hmm. So, okay. Can you tell us about the three financial statements, the balance sheet, income statement, and cash flow statements, and how important are they when someone's investing in a business?
Well, as I said, I am looking forward to becoming more expertise in the balance sheets and income statement and cash flow. Balance sheet is a snapshot of the company at a certain point in time, how they're well or doing, that type of thing. Income statement is and the cash flow are happen to be running totals, so to see how it does over a period of time. So a little bit different, but I am taking an auditing course now, and want to focus on financial statements to actually train myself on this area. I know. As you say, the accounting is the language of the stock market. But you know something, you don't have to go into detail to be expert at the stock market in the fundamentals. You don't have to be so close to the company that calling the company the CEO every day and that type of thing. You don't have to be too expert, but it's a matter of having enough confidence. That's the idea. Just enough confidence that the company's going to do well and they can follow along with it.
Right. Well, Brian, thank you for coming on the show. This was a wonderful interview. It was very informative. I'm gonna post your website down below in the description, your book down below in the description. Do you have any social media or no?
Oh, I'm on LinkedIn.
Mm.
I have Facebook, but I don't use it very often. I just use just to see what how the wrestlers are doing, and so that type of thing. Just some of the news items I look at in Facebook. That's about it. But I
Oh,
do have a an entry in LinkedIn, and that's where I do most of my posting.
okay, so you can send me your LinkedIn social network, and then I can post that down below as well.
Okay, is that it? Thank you very much,
Yes,
Daniel, for this opportunity. It's been great.
yes, nice meeting you. It was a pleasure. Okay,
Okay, okay,
bye-bye.
bye bye.